Welcome. In this video today, what happens if we buy 100,000 Zbcn? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
The ascending curve formation observed in the price chart is often considered a sign of a positive structure in technical analysis. The core logic of this formation is that the price exhibits an upward trend over time by forming higher lows and higher highs. This typically indicates that buying pressure is outweighing selling pressure in the market, leading to continued upward movement in price. At present, the price has touched the support line of this ascending curve formation, and if a bounce occurs from this level, it could signal the start of a strong upward momentum. For investors, this scenario can be seen as a potential buying opportunity, as trading in the direction of the trend is considered one of the safer and more consistent strategies in technical analysis. Ascending curves also have a psychologically positive impact. As investors see the price maintaining its upward path by consistently forming higher lows, their confidence in the trend continuing tends to grow. This sense of confidence can also increase trading volume, which may further push the price upward. In the current situation, if the price reacts positively from the curve without breaking below it, it suggests that buyers still have control and that the upside potential has not yet been exhausted. Therefore, a bounce from this level can be considered a fundamental condition for the continuation of the uptrend from a technical perspective. It may also be helpful to examine how reactions from the curve support have played out in the past. If this support level has held previously and the price bounced to form new highs, it strengthens the curve's credibility and shows how seriously market participants take it. According to the principle of historical repetition in technical analysis, support levels that have worked in the past tend to produce similar reactions again. In this context, the curve support acts as a strong psychological and technical barrier. A bounce from this level could initiate a new wave of upward movement, supporting the price to reach higher levels not just in the short term, but also in the medium to long term. Ascending curves also serve as excellent reference points for trend-following strategies. As long as the price stays above the curve, the general direction is considered upward. This allows investors to adhere to the principle, the trend is your friend, and hold positions for longer periods. Each touchpoint on the curve can present new buying opportunities for both short-term and medium-term investors. If these reactions are supported by strong volume, the sustainability of the uptrend increases. Currently, the price has touched the support of the curve, and any buying reaction observed at this level could form a strong foundation for continued upward movement. Especially during periods of heightened volatility, the curve's support becomes even more critical for investors. When the market is filled with uncertainty, investors seek clear reference points. At such times, curve support provides a level where, even if the price declines, the probability of a recovery is high. This is a crucial zone for both those looking to enter new positions and those already holding them. Holding above the curve is a key indicator that the market still has an upward bias. Conversely, a breakdown below the curve could technically indicate that the trend is weakening or ending. However, based on the current structure, the price continues to move along the curve, and at this point, the probability of a bounce seems high. Technically, this bounce would restore both confidence and momentum. Such reactions also help investors set stop-loss levels more comfortably, as the area just below the curve is often considered a zone where risk can be minimized. Therefore, a bounce from the curve is a favorable scenario for investors and should be taken seriously. Considering the geometric structure of the curve, it's clear that such formations influence investor decisions both visually and mathematically. If the curve is steep, it indicates an accelerating uptrend. A more horizontal curve suggests a more stable and sustainable rise. The current curve observed shows that the price is rising in a structured and controlled manner. This indicates a healthier uptrend away from sudden crashes. Thus, the direction, angle, and the price's reaction to this curve are all critically important in technical terms. At the current price level, the fact that it has touched the support zone of the ascending curve signals a crucial inflection point. If the price reacts sharply upward from this area, it would paint a positive picture for both short-term and long-term investors. Additionally, such price action could positively influence market sentiment, attracting more buyers and potentially triggering a chain reaction of buying pressure, pushing the price even higher. In conclusion, a bounce from the ascending curve at this point would be a highly favorable development from a technical perspective. Such a reaction could help the price maintain its upward momentum, form new highs, and strengthen the trend. As long as the price stays above the curve, the trend structure remains intact, allowing investors to confidently follow their technical strategies. Therefore, the movements observed after this support touch are of great importance for determining the future price direction. But we can't rely solely on the curve for analysis. Let's look at other metrics too. Stay tuned.
The ascending channel formation is a price structure frequently used by investors in technical analysis and is considered quite reliable. This structure shows that the price moves within parallel lines, both at the lows and the highs. Movement within the channel implies that the market is steadily progressing in a certain trend direction. Especially if this structure takes the form of an ascending channel, it generally indicates that the price has upward momentum. In this context, after touching the lower boundary of the channel, the price continuing its upward movement by crossing the middle band and then potentially reaching the upper band is highly likely. From a technical analysis perspective, this shows that the price is progressing within a healthy trend and that buying pressure is strong. In ascending channel formations, the middle band often acts as both support and resistance. If the price is trading below this middle band, it typically serves as resistance during attempts to break upward. However, if the price manages to rise above the middle band and sustain itself at that level, investor confidence increases, which leads to stronger buying pressure. Therefore, in the current scenario, the price crossing the middle band within the ascending channel is an extremely positive development for the market. From a technical analysis standpoint, this indicates that the price is maintaining its uptrend and that this trend is likely gaining momentum. Particularly after passing the middle band, it is rational to expect the price's target to be the upper band of the channel, both psychologically for investors and based on past price movements. In this case, it is possible to speak of a potential rise to around the 0.0095 level. Such targets align not only with chart data, but also with psychological price levels. For example, the 0.0095 level could be a psychological resistance zone for some investors. Therefore, during the upward movement toward this level, an increase in trading volume, strengthening momentum indicators, and a noticeable positive sentiment among market participants may be observed. These developments are some of the fundamental indicators supporting the price reaching the stated level. Additionally, for price action within the ascending channel to be considered healthy, occasional touches to both the lower and upper bands reinforce the strength of the channel structure. Price movements that start at the lower band, cross the middle band, and head toward the upper band support the technical validity of the channel boundaries. This also means that the price consolidates within certain ranges and gathers strength again, which signals the sustainability of the long-term uptrend. In this context, the possibility of a rise up to the 0.0095 level following the crossing of the middle band is a technically strong probability. One of the most important details in ascending channels is how the trend lines affect investor confidence. If investors recognize that the channel is working and that the price respects this structure, it increases their appetite for taking positions. This can cause the price to move faster toward the upper band. The success of such formations in technical analysis is generally directly linked to investor belief in these structures. Therefore, after the price crosses the middle band, it is quite likely that investors will open additional buy positions. This contributes to an increase in trading volume and supports a more stable price rise. Movements within the channel usually occur in certain cycles. The price progressing from the lower band to the middle band and then to the upper band creates one cycle. As this cycle repeats, the channel structure strengthens further. After reaching the upper band for some time, the price may experience a pullback. In this case, a return to the middle band can start a new strength-gathering phase. If the channel structure remains intact and the lower band is preserved during this process, a foundation is laid for the continuation of the uptrend. Therefore, the fact that the price has now passed the middle band could be a sign not only of a short-term rise, but also of the channel's longer-term sustainability. Support and resistance structures are also important in this analysis. The lower band of the channel generally acts as strong support, while the upper band serves as resistance. However, the middle band can act as both support and resistance. In the current situation, passing the area where the middle band acted as resistance means this level can now start functioning as support. This provides extra assurance for the price to continue moving upward. The middle band turning into support creates a zone where the price can regain strength if buying positions experience pauses. In conclusion, the price crossing the middle band within the ascending channel is a very positive technical development. This progress increases the likelihood of the price moving toward the next stop, the upper band. Especially the alignment of the 0.0095 level with the technically identified upper band strengthens the validity of this target. Positive investor expectations, increased trading volume, technical indicators supporting the rise, and the strong preservation of the channel structure further enhance the chances of this upward movement occurring. Therefore, the current structure offers a very hopeful scenario for investors. The healthy progress of the price within this formation creates a positive atmosphere in the market by bringing both short-term buying opportunities and long-term upward potential.
This calculation for purchasing 100,000 Zbcn tokens could open the door to a very attractive opportunity for investors with small capital seeking high potential. First, let's evaluate this investment strategy step by step and examine in detail what the resulting numbers mean and what kind of picture they paint in the investor's mind. The basic information we have is this. The investor wants to buy 100,000 Zbcn tokens, and the current price of the token is around $0.005. In this case, the investor will need a total capital of 100,000 times 0.005 equals $500 to make this purchase. This amount is an accessible capital size, especially for small-scale investors who want to evaluate high-risk but high-return opportunities in the cryptocurrency market. Owning 100,000 coins with a $500 capital represents a great opportunity that can create a multiplier effect in potential price increases. At this point, we see the target price level is $0.0095. This is the projected price level that Zbcn could potentially reach. A target price of $0.0095 represents approximately a 90% increase from the current price of $0.005. In other words, the investor's profit per token will be $0.0045. This means a net profit of 100,000 times 0.0045 equals $450 for 100,000 tokens. In other words, the investor's $500 capital would become $950 if the target price is realized. This means the investment would increase in value by approximately 90%. This rate is a return rarely seen in traditional markets in the short term. However, cryptocurrency markets are inherently open to such sudden jumps and corrections. To understand whether Zbcn has the potential to make this jump, not only technical data, but also fundamental analysis and project developments should be carefully examined. If Zbcn's current market capitalization, market cap, is around $500 million, this token can still be considered among early-stage projects. Market caps at this level indicate that projects are still in development phases and may not yet have entered the radar of large investors. If the project has a strong team behind it, real use cases, an active community, and regular updates, these point to the presence of fundamental factors that will support the price increase. For such a rise to occur, factors like increasing liquidity, more listings on exchanges, new partnerships by the project, or completion of important steps in the roadmap are crucial. Also, the general market sentiment, whether it is a bull or bear market, can directly affect altcoin price movements. In a bull market, coins like Zbcn with potential and low market cap are much more likely to experience multiple fold increases. It should also be remembered that psychological thresholds play an important role in investment decisions. For example, some investors may take profits before a coin reaches $0.01, causing a temporary correction before the price hits those levels. However, if the price breaks this psychological barrier, new purchases generally follow and the price moves to higher levels. Therefore, target prices like $0.0095 should be determined carefully both technically and psychologically. At this point, owning 100,000 Zbcn tokens may provide benefits not only from price appreciation, but also from possible airdrops, staking, or community events. Crypto projects often offer various rewards or privileges to token holders. These advantages can provide the investor with additional benefits through passive income or rewards, not just price gains. Another strategy for the investor is the staggered sale approach. If the entire position is not sold when the target price of $0.0095 is reached, and some tokens are held for higher levels, potential profits could grow further. For example, If the investor sells 50,000 tokens at $0.0095 and holds the remaining 50,000 tokens for $0.015 or $0.002, the total profit amount may increase. This strategy helps reduce risks while optimizing returns. In light of all these assessments, an investor wanting to buy 100,000 Zbcn tokens should act not only with a short-term profit target, but also by considering medium and long-term opportunities. If Zbcn has a strong project behind it, an active community, and a sustainable vision, the $0.0095 target price could be only the beginning. According to the project's growth potential, levels like $0.015, $0.02, and even higher could technically become possible. At this point, the investor's own risk appetite also comes into play. Since crypto markets are highly volatile, it's important that the invested amount is at a level that would not cause serious trouble if it lost. However, for investors operating under the high-risk, high-reward principle, such opportunities can be very exciting in terms of potential gains. In summary, the $500 investment required to buy 100,000 Zbcn tokens could turn into a value of $950 if the price reaches $0.0095. This means a very high return rate of about 90%. Considering Zbcn's current position, market cap level, project development process, and overall market conditions, if the likelihood of this target being reached is supported by strong technical and fundamental reasons, the probability of a positive investment outcome is quite high. However, as with every investment, careful analysis, disciplined strategy, and conscious risk management are essential in this case as well.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.